Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market balanced within a range, and at this point heading into the open, we know that the buy side has been dominant overnight, but overall the market is still stuck in a balance, and for that reason, we are going to favor the buy side, but our short-term bias is going to be neutral. So that means that we do need to see broad market strength, a strong advanced decline line, the other markets participating in the upside move, and sustained upside momentum in order for the market to continue printing higher prices. Now, in the overnight session, we saw that NQ has held up quite well and is pretty much back up towards its recent balance area high. Russell is the only one that was showing a little bit more weakness in comparison to ES and NQ, but Russell can put in a catch-up move. So as long as we're not seeing any big selling coming into the Russell, and we're not seeing any major weakness on the advanced decline, a pullback can provide a good long setup off of the 72 to 74. And then on the upside, in order to retest 81.5 to 83.5 or get any kind of breakout above 81.5 to 83.5, we are going to want to see a fairly strong advanced decline line, which is trending higher, and some sustained upside momentum. Without that, the market can actually just continue bouncing within a range. It can attract sellers at 81.5 to 83.5 or make a marginal high, and then the sell side steps in. On the upside, in the event that we do get a breakout beyond 83.5, we would be exhausting the range by the 87 to 89 area, and definitely by 91.75 to 93.75. So the upside potential beyond 83.5 is pretty questionable, especially if the market continues to run on fairly light volume. On the downside, below 72, we have the overnight low at 21.70. It was also an area where we saw some responsive buying come in yesterday. And below that, we have support at 66.5 to 68.5, which marks yesterday's low as well as Friday's RTH low. So that's still an area where responsive buyers can be active. And in order for the market to really break down and head lower, we are going to have to see then a lot of weakness on the internals and the other markets participating in the downside, which also may not happen. So, the default scenario is going to be balancing within a range with an upward tilt, and with the buy side being more dominant because we are still in a more bullish market environment. So in order for us to consider short setups, we are going to have to either secure a very good trade location or see something in real time that is significant enough to warrant a short. Otherwise, the focus will be more on the long side. And as the market moves lower, in order to short it at a lower price, we're going to have to see even more in real time. We're going to have to see a lot of weakness in real time and sustained downside momentum, the other markets cracking lower. So right now, the focus will still be more on long setups, and we have to be cautious on the short side because the market could simply balance within the recent range or balance and then test the 81.5 to 83.5 or even make a marginal new high today. So those are the higher odds scenarios as compared to a complete reversal and a move significantly lower. So those are the main thoughts heading into the open. Let's keep an eye on the 77 to 79. A breakout above that area would confirm the short-term bullishness and bring 81.5 to 83.5 into play. And if we are seeing sufficient upside momentum and broad market strength, then the market could be breaking higher and going up towards 87 to 89. And keep in mind that beyond 83.5 there is no hard resistance, so at that point it's really just a matter of how far we can extend the range. And how we react at 77, 79, and 72 to 74 will help set the short-term bias on the day time frame. So those are the main ideas. Let's see if the buy side can maintain control above 72 to 74 or even holding above 2170, and we'll take it from there.